Donald Trump and Joe Biden will go head-to-head on Tuesday, the 3rd of November, in the race to become the President of the United States. According to the latest polls, Biden is currently the frontrunner, with more than half of Americans expected to vote for the Democratic candidate. Joining me to discuss what he's expecting is Chris Watling, CEO at Longview Economics. Chris, good to chat to you. First and foremost, obvious question, who do you think is going to win? And what are some of the swing states that we should be watching on the night?
Yeah, absolutely. I mean, I think it looks, one never knows with the polls, of course. We're all skeptical about polls now, but it really looks quite convincing to Biden at the moment. And of course, it's not really about the national polls. It's about getting the number of electoral college votes and winning certain states. And those marginals that you mentioned, the sort of Pennsylvania, the Michigans, the Floridas, and so on. They're all really key, and those polls are tighter in some of those marginal states, absolutely. But I just feel that the college women, the non-college women, they're going to be quite key in this election. And unlike last time, where they weren't quite as familiar with Trump as they are now, they seem to be rather put off by Trump. And I suspect, Joe Biden's also a bit of a man of the people, so he gets a bit of Trump's base, which is the sort of the white sort of non-college voters, which are very strong for Trump. So he chips away at that. So I think those two key areas means that Biden will probably win, and it'll go as the polls say. An interesting question will be how do both houses end up? I think that's where it becomes quite interesting and critical in terms of policy going forwards.
So tell us what you're expecting then in terms of the houses.
Well, I think the House of Representatives will clearly stay Democrat. There's no major debate there. What's most interesting is the Senate, where, of course, the Republicans currently hold a majority. There's a real sense that that's quite a closer race. I think if the Democrats retain, they get their 50-51 senators, then Biden will have a full house, if you like, a full pack of cards, the two houses and the presidency. But I think there's a real chance that you may get one or two tipping it over towards a Republican Senate, and that will change the dynamics of Biden's presidency quite meaningfully.
So in terms of the issues that the election is being fought on, obviously the pandemic is front and center, but are there any other issues that you think might be at play here?
Yeah, in terms of the way the presidency plays out, I think the fiscal stimulus package will depend on how the two houses go, whether they go with the presidency or against it. The return of the Republican hawks is likely in the Senate if we have a Biden presidency and the Senate majority is Republican. And that will influence the fiscal stimulus bill. It'll influence the size of it, and so it'll influence the market reaction. That's key. And obviously, all sorts of other things are key. Who wins the race, the presidency, will impact the geopolitical situation. It'll impact how healthcare plays out. It'll probably impact spending on defense and military and stuff like that. So there's a whole range of issues that are going to be touched on depending on who wins. So there's some quite key stuff at stake, I think.
So let's talk about the equity markets. Obviously, it's been a very shaky week for the major averages stateside. We saw some heavy losses on Wednesday. How do you think investors should be positioned when it comes to the equity markets going into the election? And then afterwards, in the case of sort of the main potential outcomes, what could we expect to see in terms of market reaction?
Yeah, it's a great question. From my perspective, it looks as though markets are hedging themselves into this election. We've had obviously quite significant downside yesterday, which was Wednesday, and it's pretty soggy at the time we're recording this, midday Thursday. And yeah, if I look at short-term 1 to 2 week models, they're pretty much getting onto a buy, strong buy almost across the board. They've been moving lower over the course of the last week, 10 days. And I suspect give it another day or two, there'll be very clear, very punchy, strong buy signals. So, I think that hedging's playing out, but actually it's setting us up for a nice rally on the back of the election, on election night, on Wednesday morning next week, depending on the result. I think the majority of results will give an election in the equity market, particularly given the positioning in the models and the fear and the hedging that's being priced in right now. So you can see that in the VIX very simply. The VIX at 40 yesterday, or the steepness of the VIX curve, is inverted quite meaningfully between 1 and 6 months and spot rates in 6 months. All of that gives you very good short-term signals that tells you there's a lot of fear priced in, a lot of hedging being done, and markets are ready to pop to the upside. And quite frankly, if we get a scenario, an election outcome whereby there's another fiscal stimulus package, I think you'll get a pretty good move to the upside, actually a bit like where we saw in 2016 after the election result then, because markets will have to price in another fiscal stimulus, and it could well be $1.5–2 trillion, which is very meaningful. Added to which, we may not be that far from getting a successful vaccine outcome, which again adds further fuel to the economic sort of upside case for 2021, and markets will have to start thinking about that. So I suspect the election is going to be there's a good chance it's going to be a very good buying opportunity on a multi-week, multi-month basis in equity markets. So yeah, I think it's an interesting opportunity coming up.
Yeah, it's interesting that you're more focused on the vaccines, because the markets this week at least appear to be more concerned about this huge surge in COVID cases that we're seeing in the US. Does that not concern you? And do you not think that could dampen asset prices towards the end of the year?
Well, I mean, I think markets, they tend to, I mean, it's a bit of an issue, but markets tend to look through these things. The reality is if a vaccine is genuinely likely, and it seems to me that's increasingly the case, if you listen to the Pfizer CEO or the Moderna comments or any number of these guys, the fact that the Chinese are already vaccinating a bunch of people with a Chinese vaccine. So, markets tend to look through near-term stuff, and if they can see into 2021 and they can see a vaccine and they can see more stimulus and they can see actually the $2 trillion of excess savings in US households' bank accounts as a result of this pandemic, there's a lot of fuel there for some very serious economic strength next year. So, yes, rising infections is a bit of an issue right now, but the treatments are much better than they were in March. A lot of the infections is amongst the young who tend to be hospitalized less. So the headlines are a little bit scary. Perhaps they're unnerving markets a bit. I think primarily what's going on is people are pricing in election risk and they're hedging portfolios ahead of it and just taking a few chips off the table. So, yeah, I think markets look beyond that. The main focus should be on the vaccine. That's the key thing here. That's the real stimulus.
So how do all of these dynamics play out for the US dollar? Obviously, we've seen some flows towards the safe haven this week, but broadly, since those highs in March, we have seen a major turnaround, and it seems to be in sort of a medium-term downtrend. Do you think that weakness for the greenback continues after the election and into 2021?
No, I think the dollar's due a counter-trend rally. So the narrative in the market is the dollar's going down forever because they're trashing the government balance sheet and trashing the central bank balance sheet, and they're doing it faster than pretty much any other central bank and government around the world. So the narrative is very bearish, but I think we're going to get a move against that and some dollar strength on the back of actually a backup in bond yields post-election, and some sense that we're going to get a fiscal package and that growth's going to look better next year. So particularly if we get that vaccine as well, because that for me is we'll get yields up and provide that yield support for the dollar. And unwind really, positioning's very short the dollar, sentiment's very bearish, and probably and typically on a multi-month view you want to lean against that stuff and go the other way. So we can get an unwinding of that short positioning and an unwinding of that bearishness. And I think that would be consistent with yields backing up and a bit of dollar strength, as I say.
Okay, so if we do get that COVID relief bill in terms of the fiscal stimulus, and it looks as though markets are increasingly pricing in the chances of a vaccine, what does that mean for the need for monetary policy? Do you think we'll continue to need ultra-loose monetary policy? Do you think we'll see further measures from the Fed, or have we got enough in terms of the fiscal side if it's combined with, say, the vaccine?
Well, I think we've got enough, but I think the Fed will just keep going. I mean, they seem pretty resolute in their intention about stimulating until unemployment gets to low levels. If you listen to Jerome Powell, he's quite clear. He's not bothered about the size of the Fed's balance sheet. He's not bothered about financial stability. He doesn't think that QE created any bubbles in the last 10 years, so he's not concerned about that. And all he really seems to be concerned about is getting unemployment rate down back to that sort of 4% level, which, to be honest, I'm not sure he's going to achieve. I don't think unemployment will get that low again for a long time. And of course, they've moved their inflation target to an average of 2 instead of just at 2. So in other words, they can let it run hot, they can let inflation go above target. So they're not going to be in a hurry to stop stimulating. I think they're going to keep their foot on the accelerator way into next year. And it's really until they see the strong evidence of strong growth and the vaccine will be part of that, as I say, then I think you'll find that that the Fed is very much on this market side. And as we know, and as we've seen over the last 10 years, liquidity from the Fed is really the key, one of the key inputs into market direction. So all of that, I think, is fairly positive for equity markets.
All right, Chris, thank you so much for your answers as always.
Thank you.
And that was Chris Watling, CEO at Longview Economics. I'm Victoria Scholar, and thank you for watching IGTV.
For more videos like these, subscribe to our YouTube channel, IG UK, and make sure to follow us on Twitter. We're at IGTV.